Hello, hello, everyone, and welcome to Losers Become Winners for March 12th, 2020. VIAC, Viacon, roars past XLE to 71%. Wow, let's go look at that chart because that trade just happened this morning. So there it is. We had set an entry here based off this dipper. We are using some of the day traders' opportunities, and we got filled here with a gap. It happens. I was anticipating in paying. Now we were anticipating 675. We only paid 490. So actually, it came out pretty good in our favor. But the great part was it hit 71% at $700 return. This is the trade profit owing 1069. Now, if you saw an earlier video, I did have a 10,006. What was I went back and found out there was $63 being accredited to Viacom that should not have been there because it was made in 2014 and I was in profit then. You only count from the losses going forward, and you can't count any of your profits in the past for a wash. That's the way it is. So they owe us 1069 from 2015 and they're up to 700. 369 more dollars, get to break even. All right, that said, it's at 71. The stop has been moved now to last bar high. We are in a put situation. That said, let's move on now to XLE, another one who's gone into the take profit zone. Remember, our take profits is 30% of the option. So if you get into an option play, do understand that that's what you want. Now you'll see here I did carry some of the ruling of what we did earlier yesterday. I did a report on ratio as part of the lesson. So we're running it here as a tracker. So we'll see how we're going to continue to our rules of the rules that I have for this trade, but we're going to see how it stands up against the ratio reward take profit target trading. 39%, 585, holding off against 930. Now look this. XLE originally owed us 1445 from 2018. So from 2018 to the current time, we made about maybe 500 something dollars to get down to 930. Now we're sitting at 585 against 530, another 400, not even $400. And it's gonna come home and get retired to the winner's circle. Yeah, we're running about 50. We're running 66. I'll say about because I go back and I check my numbers on the every once in a while to make sure that I enter the right credits. So if I find an error, I will update it to the current info. That said, moving now out of the take profit zone into the profit zone. This is take profits. This is your profit zone. So starting off with Microsoft at 18%. Let's go down there and check that out and see what's happening there. Let's zoom in a little closer. And now you notice today was really one of those, you can't call it oddball days, but yeah, I call it an oddball day. We had a lot of gap down. Now what happened was the futures overnight. Now what are the futures? The futures are the markets that open up after New York, and the next one that opens up after New York is New Zealand. So down there, I think it's Christchurch, or what's the other one? I'm not sure what the other major town is in city in New Zealand, but that's the New Zealand market. They will get to open first, followed by Australia, Japan, then moving over to Hong Kong, Shanghai, Hong Kong, and on around the world. So by the time the price reaches back to New York, this was a sell-off. So if you're here, says the Dow is showing futures of opening up 200 points down or opening up 300 points up. It's because the overnight buyers have got into the play, and so by the time the price gets to New York, that's the results. So not bad. I mean, we got in here, we're here, and we're holding 18%. Another 12%, we can go to last bar high or whatever the last bar high develops over here to take profit. So moving in, we're still in the profit zone here with DIA now. Oh, the stop stays right here. This is the hipper. It's the reverse of your dipper. Remember, here's your dipper, right from the day trader's trade book. And this is also a day trader. This is a day trader here. They don't call it a dip, they call it the high. I call it a hipper because it rhymes nicely with the dipper. So that's what it is. So we're staying on a hipper exit because it's a put in this direction. The price reverses, we're going to get out. That said, let's get over now to DIA running at 13%. Now, you have to realize DIA is an expensive option, very expensive. Look at this. I was anticipating only 1910, and I got filled at, can you believe it? $28. One contract is costing me nearly $3,000. Not too happy about that, but here's the point. The market collapses just a little bit more. I only need 17 more percent, and as soon as it hits that 30% take profit zone, boom, I'm going to be here or whatever it is that I can get out of this trade. So right now we're here defending here. This is a defense. What's a defense? A defense is that you've got capital in play and you're defending the capital before it gets into profit. Then you get into your profit zone, and then you get into your take profit. So moving now to IWM. Okay, the IWM is here, and I am same pattern. Look at this. Now here we came off here. We came off of what I call is my hawk. And it's actually a fireball hawk, which means I'm going in the down direction. I went for a put. And oh, I just noticed my notes are not really completely clear here, so let's clear that up. It is the alpha account, and we are going to go to fireball, which indicates a down direction, and hit OK. So it's a fireball hawk. That's what it was here. Got hit with gaposis. I was anticipating 1055 on the pay, and IWM cost me 1477. Those gaps are tremendous. They happen, and there's really nothing we can do about it. It is what it is. Unless you're an international trader and you're able to participate in the overnight and get maybe an option here in New Zealand, or maybe an option here in see the last market after Hong Kong, Singapore, and after Singapore there is Mumbai, New Delhi, and then finally we cross into Eastern Europe, Rome, then we get into Rome, and then from Rome we get to Paris, London, and then New York. So right there is your international action in that gap. All right. But this is at 21. It's not bad. Another 9%. We're going to be able to get the last bar low. So there we'll be looking at that. There's nothing to report with laggers, Talman, and Newmine was very disappointing. It opened. I'll go and show it to you. I really was not happy about Newmount. It opened here and went up. Huh? And all the indicators are indicating down. So what is the rules? The rules is we stick to the plan. There is no deviation. I will be moving the stop here to the defense. I will be doing it to the 30-day moving average as a defense. It's past the body. I look for the body to get past the 30-day moving average for the defense. I'll still be in negative territory, but we'll see what happens. I mean, the indicators indicate down. We'll follow it through. That said, let's flip over now to the Tigers. And unfortunately, the Tigers don't have, and none of their trades triggered. We're going to have to go back and continue at it. What's happening is, and I mentioned it yesterday, that the market makers are really having wide spreads at the bid and ask. What can we do about it? Nothing. If you find a proper setup with your bid and ask, it's in the parameters, set the trade up. If you don't, you're going to have to do a day trade, execute a day trade, and if you can't, just patiently wait. Sit on your hands and wait. With that it? Well, that's it for the losers and become winners for March 12, 2020. I thank you for stopping by and checking that out, and catch you tomorrow. Bye-bye.